our experts for the day today, and we are being joined by Vaishali Parekh as well as Kunal Bothra on the technical front. So let's talk markets. And Vaishali, first up, coming to you, give us a sense on Nifty as well as Bank Nifty, because though the broader markets just yesterday they were seen to be outperforming, but the benchmark indices were quite silent throughout, though there has been a decent recovery from the day's low. But what's been your reading, and which are the key levels that you are watching out for?
Hi, very good morning, all of you. So yes, market has been just oscillating. There is actually no trend, and we are seeing a narrow range in the major index, Nifty as well as Bank Nifty. So if you see every on a day-to-day basis, there is always some sector which is showing strength and some which is getting into a corrective mode. So well, it is a very strong base that is currently being made at 22,800 levels. So a little bit here and there, 22,750. So that is the base, and we need to see Nifty move past at least 23,250 to 23,300 to see a confirmation of an uptrend to come in. So till then, I would say it's a sideways move. Even if you see Bank Nifty, I mean, of course, compared to Nifty, it's better place. But well, yesterday we saw HDFC Bank getting into the corrective mode, but it was Axis Bank and the other banks, the PSU banks, which were coming in action. So it's a mixed baggage. Nothing much to talk about the major indices, but I would say it is definitely a time to look for stocks which have come to technical good support levels and start accumulating those. So that is what we have been doing with our clients.
Right, so that's the strategy when you talk about the Nifty. Good morning, Vaishali. Good morning, Kunal. And wanted to understand your take as to what should we actually rather read too much into this recovery that we've seen in the SMIDs over the last two trading sessions. They've outperformed the benchmarks. Do you think this is a telling sign, or someone should just wait and watch?
I think it's more to do with the relief rally which was impending for many of these, significantly beaten down, mid cap and small cap names. There was a point where many of these stocks have fallen by 30% in the last 8 to 9 odd trading sessions. So there's bound to be a point where these stocks see a stability, see a short covering move or a bounce back, leading into the mean reversion phases for many of these stocks, depending on indicators, on price fronts, etc. So I think what we saw was a classic move of that. But the concern for the markets was that large cap stocks and the ones which have been very strong, they started to show signs of some pressure coming back from higher levels for themselves. So I think what we need to see is that over the next couple of days, if this is a pattern which gets repeated for the index, if large cap stocks are the ones which see some bit of receding from their previous highs or from the previous swing high patterns, then we can expect that the markets are going into a drift on the downside. We are also going to, I think, likely retest the 22,800 mark for the fifth or the sixth consecutive time in the last many days. So I think that could also be a final litmus test. We've seen Friday in the last, I think, 5 or 6 Fridays, the index is not 5 out of the last 6 Fridays, the index is not closed on an extremely positive note, and we've managed to break below some crucial supports on that particular day. So I think that's also another concern which the markets would probably linger on to. So I think it's better to wait and watch and be a slight bit more defensive than what I think one could have been the last couple of days.
All right, let's see that